Hello everyone and welcome back to Crypto Atlas. In today's episode we will be talking about Bitcoin, Orchid, the graph, as well as REN, looking at those on the charts. We'll also be discussing some of the latest news going on with Bitcoin, actually starting off with the news on that. If you guys are new to the channel, don't forget to hit subscribe. Hit that like button if you can. It'd be greatly appreciated. We're trying to get to around 100 likes on this video. If we could hit 100, that'd be absolutely amazing. It lets me know that you guys enjoy this content, you enjoy the information in the news, and also hopefully helps us in getting this community a little bit bigger. And also click the bell icon so you know whenever we have the latest video. Okay, so first thing, this is actually some pretty breaking news, at least as of the time of me recording this video. I don't know if you guys have heard about this yet or not, but the House has voted to increase the COVID-19 stimulus payments to the $2,000 limit. We were hearing about this in the United States, discussions back and forth. There was a $600 and Trump was saying like, no, we should push for the $2,000. But then next thing you know, he ends up signing off on the $600. So a lot of this confusion going back and forth. So what ended up happening today is the House actually voted to increase the $600 to the $2,000 limit. And now it's going from the House over to Congress. The House voted with a 2/3 majority vote. Measure now heads to the Republican-controlled Senate. So it's up to them, right? But you think about it, this is actually really important. Last time we had stimulus checks for $1,200, you know what happened? Most people dumped, well, not most, a lot of people dumped their $1,200 checks into Bitcoin with a direct deposit transfer over there. Coinbase was seeing huge increases for purchases of Bitcoin in exactly that amount. So a $2,000 price or $600 price, I think, is much more likely. We might even be seeing some $600 amounts occurring right now. And if the $2,000 is guaranteed, then you could see another $1,400 increase levels as people were just basically taking into account money that they haven't received yet, right? So spending the $600 now before all the flood comes in of the regular people trying to capitalize on that early movers advantage position. So I'd be looking at those kinds of levels. I'm curious if they're going to come out with levels showing a $1,400 and a $2,000 level purchase of Bitcoin through Coinbase's system. So that's the first little bit of information right there. And coincidentally, we were seeing things like the stock market going up, and there's a company here, actually several companies that I want to highlight that started showing signs of their stocks going up, and they're pertaining to the mining processes of Bitcoin. So Bitcoin mining stocks surge after the cryptocurrency passes $28,000 for the first time. The Bitcoin mining companies Riot, Blockchain, and Marathon Patent Group soared on Monday morning as investors anticipate Bitcoin's rally will continue into 2021. Both mining companies recently announced purchases of more Bitcoin mining equipment. On Monday, Marathon said it would purchase 70,000 miners for $170 million from Bitmain. Bitcoin hit a record high on Sunday, jumping past $28,000 for the first time. Shares of the microgrid software company CleanSpark gained as much as 16% on Monday as well. Last week, CleanSpark announced that it would add 1,000 Bitcoin miners to its fleet. Very, very nice. That's a lot of equipment going on right there. And then also, in relationship to Riot, their company has reached a $1.08 billion market capitalization on Monday after surging nearly 13% in early trading hours. Shares of the Castle Rock Colo-based firm have gained over 1,250% in 2020, currently trading hands above $16. Over the same period, Bitcoin gained nearly 280%. Riot has issued nearly 17 million shares since November, with a total of 67.5 million shares outstanding, according to data collected by YCharts.com. Riot has aggressively expanded the size and sophistication of its mining operations in 2020, including a planned pilot project in Texas to test water immersion cooling technology, in addition to purchasing over 31,000 new ASIC mining machines this year, per CoinDesk's prior reporting. Riot shares opened Monday nearly 18% higher than the Thursday close on Christmas Eve. Riot pivoted its business model from biotech to Bitcoin mining in October 2017, when the company's value was less than $50 million. 2020 has seen the fewest Bitcoin obituaries in 8 years. And by obituaries, what we're talking about is people saying that Bitcoin's dead, right? So Bitcoin has been declared dead or dying roughly 390 times since 2010. but this year it's dying much less frequently. In 2020, Bitcoin has been reported dead or dying only 11 times per a list of these faux obituaries maintained by a Singapore-based website called 99 Bitcoins. So that's some interesting news. I mean, obviously, we've been seeing some massive upticks ever since the March period. I would have expected a little bit more to have occurred this year than compared to last year because of everything that declined around in the March period. But the fact that it is so minimal by comparison, I think shows a lot more of the sentiment behind people thinking that this is a long-term based project, right? And it's not as risky as what it was before. All right. Dow Jones hits its record high on Trump stimulus. Apple nears new buy point while Bitcoin surged above $28,000 recently. The Dow Jones Industrial Average briefly rallied over 300 points Monday to hit a record high after President Trump signed the coronavirus relief bill. Apple stock is approaching a new buy point while Tesla is again nearing record highs. The price of Bitcoin briefly surged above $28,000. Late Sunday, President Donald Trump signed the $900 billion relief deal and $1.4 trillion omnibus spending package. Trump said in a statement that the Senate would start the process for a vote that increases checks to $2,000. The House already plans to vote on a measure to increase the direct payment. So as I mentioned earlier, the House has already voted on it shortly after when this article came out. Now it's up to the Senate, which is largely Republican-led, in order to make that decision to approve the $2,000 price point. Next up, the petition has been launched to extend comment period on cryptocurrency/Bitcoin self-custody regulations. I've talked a little bit about this before. So one of the things that the Trump administration is trying to finalize before leaving their office is cracking down more on cryptocurrencies and self-custody based wallets. So a lot of people don't really agree with this there's a lot of different reasons. Excuse me, my nose itches. And so being able to discuss this more openly with the right organization is one of the objective goals of people from the cryptocurrency space, because we want to make sure that we handle this correctly, but at the same time, you don't want to jeopardize what a lot of cryptocurrency is standing for, like a little bug or something right there. FinCEN, Financial Crimes Enforcement Network, a portion of the Treasury Department which is responsible for enforcing transparency requirements around financial flows in the Bank Secrecy Act, is looking to impose regulations that force regulated entities to keep records on identity when they're looking to transact in cryptocurrencies. Specifically, a $3,000 threshold for when there is a transaction with an unhosted wallet, a wallet of somebody who hasn't gone through formal KYC/AML, and which isn't hosted on an exchange or bank, and which is oftentimes in self-custody. The petition to extend the comment period on this proposed rule had an original goal of 2,500 signatures, but it is now above that and seeking 5,000 signatures as of the time of publishing. It is being started by the Chamber of Digital Commerce, a crypto assets trade association with members including leading cryptocurrency exchanges and certain banks. Part of the urgency stems from the shortness of the comment period. Usually comment periods can extend up to 90 days, with a norm of 30 days, and a period that can stretch up to 60 days when there is a significant issue at hand. FinCEN has proposed a 15-day comment period and stacked many of those days during the holidays, making it very difficult to get any significant replies. What do you guys think about this? Let us know in the comments down below. Financial guru Dave Ramsey doubts Bitcoin can be cashed out, advises Bitcoin investor to sell now. Sounds like this guy really doesn't know much about Bitcoin, and it gets worse. So basically what happened is there's a guy that called in, said, hey, I invested some money, said that he invested $1,500 into Bitcoin back in 2014. Now it's worth about $120,000. And so he's like, I don't really have this income coming in. What should I do? Right? Trying to get this guy's advice. So the guy is saying, Ramsey here is saying, he's saying you can cash it out today for $100,000. And the other guy replied, yeah. Ramsey proceeded to educate the man. I find it kind of interesting that he's saying he's educating him. There's a process in finance called sunk cost analysis. If you don't cash it out today in the morning, you would have invested $100,000 into Bitcoin. That should scare your brains out, he exclaimed. It's not $1,500, it's $100,000. Every day you leave it there, you're reinvesting into this again. I'm slurring my words, sorry guys. The famous radio show host then advised, by nightfall, dude, cash it. If you really can, cash it out, and you might find out that this is funny money, but I hope you can. I hope that you can cash it out when you go to do it tonight. In conclusion, he said that ultimately, you do whatever you want to do, but I'm not a fan of ultra high risk investments, and at a minimum, that's what we would call Bitcoin. Ultra high risk. It's also the highest performing asset. It's also showing new highs and hitting new higher lows, right? We're not going further down, we're going further up. You have the devaluation of the dollar, right? You wanting to transfer this into cash, which is going down in value. Okay, so now he's got $120,000. He's just going to sit on that? Is that it? Or are you going to suggest taking $10,000 and investing it into what? Stock? Guess what? Stock is speculative. Stock can go up and down too. You can invest it into gold. Okay, there you go. You put it into gold. Gold can go up and down too. And as we've seen with this year, gold hasn't moved very much. So in retrospect, with the devaluation of the dollar, is gold really even worth it when you think about it as far as like an investment opportunity goes? So you're either just going to hold your money in cash and it's going to go down in value anyways, plus you're going to end up spending some of it more than likely on some things, or you can put it into an investment that looks like it's going to accrue value. Now, by comparison, he only put $1,500 into this back then. It's worth over $100,000 right now, but he didn't put $100,000 into it. It's a matter of perspective of how you look at these kinds of things. I wish I had a more sufficient comparison. I feel like just on the tip of my brain, you know what I'm talking about? When you got something that you want to be able to explain, you're like, I know that it's there. I know I have something relatable to this, but I can't seem to just pull it out right at the second. I'm having one of those moments right now. But yeah, so there's two different ways that you can look at it. And he's looking at a much more negative perspective with this. And, you know, he could have very well said, cash out half of it, keep the other half in there. That way then you've made a higher return on your gains, right? You got more stable amount of income. You live off of $50,000 for a year or 2 years, depending on how your spending principles are. If you don't have any form of income, we're asking a question like what your level of income is. This is supposed to be a guru, right? So a speculative asset like Bitcoin that's yielded him such high levels of return, I think it should more come down to the fact of what are you willing to lose, right? And that's up to the individual person. Never invest more than what you're willing to lose. And so even if he goes with the argument saying that you're reinvesting this once again, why not look at the fundamentals and strictly say, based on your living lifestyle, what do you say, what is your base of living of what you need to be able to get by? What do you feel comfortable with? What do you feel that, especially with the times that are going on right now, that you need, right? I think that's what's important. So just because this guy that invested Bitcoin has over $120,000 worth of Bitcoin value right now doesn't mean that he knows how to spend his money and how to handle things. He made a good investment back then and it's worth a lot right now, but he's calling into a radio show host asking him for advice what he should do, right? So obviously this guy's trying to expand out his knowledge. You guys let me know what you think on this, but personally I would say like, okay, how much did you make a year with your job? Right? Obviously, when you go to cash out some of your Bitcoin with this, you're going to get taxed on it, depending on where you live, more than likely, right? And so you got to factor that in too. So if you cash it out next year, then you wouldn't actually have to report it until the following year. If you cash it out before the end of this year, well, then that's during the 2020 period. So if you wait till January 1st, okay, there you go. Now you got a full year to have to worry about whatever those taxable forms of income are. Realistically, you should already have that taken into consideration and just exclude that out. It's less stress off of your shoulders. And then I would look at some of the other things too, your cost of living and everything else I was just kind of talking about. You guys let me know what you guys think in the comments. Whale sightings become scarce, removing downward pressure on Bitcoin analysts. A lack of whales with Bitcoin aplenty to sell may be clearing the way for the price of the leading cryptocurrency to rise further, according to crypto quant chief executive Ki Young Ju. Fewer whales, Bitcoin holders possessing large balances are depositing Bitcoin onto exchanges the past few days, according to CryptoQuant, a crypto market data aggregator. CryptoQuant's exchange whale ratio, which is calculated by dividing top 10 Bitcoin inflow transactions in an hour by total Bitcoin exchange inflows, has dropped below 85%. From December 8th to the 22nd, the ratio stayed above 85%, as whales were likely profit-taking during the bull run, which reached a price zenith of $28,352 Sunday, according to CoinDesk 20 data. Some market exhaustion is expected, according to Young Ju, but he expects institutions to pick up some of the slack. I think this bull run will continue as institutional investors keep buying and exchange whale ratio keeps below 85%, Young Ju noted on Twitter. I think that's absolutely great news. So we are now, it's 4:20 p.m. Pacific Standard Time, 20 minutes into the new daily candle formation. Let's go take a look at the charts here. First up, we'll take a look at Bitcoin. As you guys can see, Bitcoin closed out yesterday in the green, still holding strong above this level of resistance previously, now showing strong signs of being a new support. As you can see back on the December 27th candle, nearing towards that level, as well as the previous day candle itself too. So far in the new daily formation, we are seeing a bit of red. I've been seeing this happen more often lately. So right after the new daily candle formation, there tends to be some selling pressure that takes place. And then we've actually been seeing some further strong gains towards the end of the next day. So potentially we could see this being the formation of the bottom wick with a further price increase moving up. The news coming out with with the stimulus checks in the House having already passed it now, and now it going over to the Senate. There is some uncertainty right there. The $600 is a nice stable point, and seeing that big green candle is more than likely a partial, at least, reflection of that news that took place over the weekend, as it was the key decisive moment that Trump had to act, and then when he had signed off on that. So, we got $600. Great. If we can get an extra $1,400, even better. We're still waiting for it to be deposited in everybody's accounts, but I'm sure there's a lot of people that are looking to try and capture on that movement already. Plus, we're getting closer to the $30,000 mark. We're still holding strong above $25,000 pretty well here. And by doing so, it stabilizes further the sentiment that we could hit $30,000. Right now, we're about $3,000 off, right? Looking at this, though, we do have some levels that we need to try and get past. First off, here on this daily formation is at $27,070. Next level is going to be $27,478. Next level after that is $28,396. And then realistically, we go through $500 increments as a psychological element, right? We don't have anything else to reference in the past. So normally when you form these trends, you're looking for 2 or more instances, but obviously we don't have those because we've never been here before. So ultimately, I would be looking at those kinds of levels, what I just had stated, as a further consideration. If we go ahead and show a little bit of a relationship now, so I just slightly moved up this line in this position, I would say realistically a major form of resistance, of support, a major form of support is going to be around $26,257. That actually coincides with the daily candle closure that took place on December 27th and the new formation on the 28th by comparison. So that is going to be a major bounce off zone potentially. If it decides it wants to drop down further, another major zone of strong consideration is going to be at 23,225. That is the 21 EMA, and that would be a quite substantial price drop if that was to take place. The likelihood of that I do not see as being very high, but it is potential, right? The probable situation is that we're going to see either a drop down looking like a potential profit take from the previous day of gains back down to this level that I just mentioned, around the $26,250 level, or further continuation up. And if we can tap into the $29,000 range, I would not be surprised if a lot of FOMO kicks in, a lot of people thinking, hey, 30K is definitely possible, time to get in. If anything, here's an easy $900, even if you cashed out right before it hit 30K, right? So you're going to have people that are going to be dumping. You're going to have people that are going to be pumping. Right now, things are absolutely crazy. The fact that we're still holding so long over $20,000 alone means that more and more people are strengthening their belief in Bitcoin. So one big concern would be looking at the RSI. right here down on the bottom zone. We are in the overbought region. It needs to drop down a bit to still go back to an average zone. However, keep in mind that during a major bull cycle like what we have, the RSI starts to kind of fall a bit off to the wayside. You don't necessarily take that as strongly into consideration. So if we had some long consolidated zones and some price action just started to move, okay, you can understand that a little bit more. And also keep in mind that we're past all-time highs, the price discovery zone. And so with that, there's a lot of uncertain questions, and this is going to have a hard time trying to reflect something that doesn't know what to reference off of, right, necessarily. All right, so that's for Bitcoin. Let's go ahead and take a look at some of the other ones pretty quickly on this. Looking at Ethereum, we have another green candle day, holding still above $700. Previous day candle was green, and we're actually still holding in the green zone right now. Major level that I would keep an eye on, guys, is going to be at $700. Obviously, a psychological level slightly above that, around $715, just because that's where we did have a bounce off of on the 27th. But I wouldn't be necessarily that worried about it. Major zone would be the $700 range. If it breaks down below that, then we see some confluence taking place right around in here. So I'm actually going to go ahead and label this as a red zone right there, and let's go ahead and get that saved. So that is right around $676. A further drop down at the 21 EMA is at $633. Whoops, did not mean to do that. And then as we climb further higher up, you have another major zone at $833. This is by comparison looking at the previous major cycle, right around a zone that we see with some of these shoulder patterns taking place off of this imagery right here. As you guys can see, shoulder off of this position right here, even some of the potential shoulders in their formations taking place off of this high. And there's also a major bounce off of back on May of 2018. So right around in this zone is going to be potentially a level that sees some major resistance. That's $838, right? Previous all-time high, $1,419. We are over halfway to that point right now. Some people might start looking at it more from a psychological standpoint and say, hey, we're already over halfway there. Cool. So I think we could actually technically go back and hit it again. Why not go ahead and start the rally and start coming at this point? You're looking at about a 2x on your investment from here, and $700 obviously in comparison to something like Bitcoin, which is in the 20,000s of dollars range. You can own more Ethereum, and owning more Ethereum could then potentially yield you a higher return if it does hit that region zone. It's easier for Ethereum to 2x right now than it is for Bitcoin because it requires less money to make Ethereum do it. You have to have more people in the belief of it, right? But that's what that is. And next up, let's go ahead and take a look at Orchid. Orchid is still playing some crazy mind games, guys. As you guys can see here, bounced right off of the 21 EMA to the T. I talk about fundamentals. And again, if you're watching the channel and you're new, why not subscribe? We cover a lot of the good news here. I do the technical analysis research, and we have an awesome community, but it would be even better with you. I know I'm doing my little sales pitch. Someone out there might be like, just keep talking on the news stuff. But, you know, at the end of the day, I'm still a person, and I want to have a nice community. And so it'd be really nice to have you guys be a part of this. And if you haven't subscribed, we'd love to have you guys. If you haven't yet, please don't forget to subscribe, to hit the like button. Let's try to get to 100 likes on this, and also click that bell icon so you can keep up to date with everything that's going on. So the 21 EMA, one of the major fundamentals that I've talked about, we have a bounce off of that directly, and the closure on the day with virtually no movement at all, still showing very bearish signs overall, as this has been holding down below that major level of support previously, even in the consolidated zone. Now with the new potential formation going sideways of a consolidated zone even further down, not showing strong signs overall. As you guys can see, I can zoom out here a bit. Oh man, my nose is itching. Major zone of consolidation within this region zone, especially off of the Fibonacci retracement there, which was dropping off of that $1 high. It's between roughly the 0.236 and about halfway up the 0.382 on the Fibonacci retracement. So in that region zone, we then saw a further decline down, some sideways action taking place for a while, and that occurred right around 24 cents and 27.5 cents. And you can see it even has extended out further to about here. Let me go ahead and get that bad boy saved. And then now as this further drop has taken place, action is tried to push back up, trying to get back into the symmetrical triangle zone, trying to break above that zone, trying to get above the 21 EMA, and you're just seeing some major resistance occurring, right? So suggestively, this can only occur for so long until it decides it wants to flip. And I think a lot of weak hands are getting shaken out. I think a lot of pump and dumps are going into this right now. And it is unfortunate that is happening, but it is what it is. And I would not be surprised if there's a lot of bot trading action that's going on that's causing this. One rumor somebody said on Twitter was that potentially people are using this as a testing grounds for their pump and dump type situations before they swap over to another crypto to push over. But, you know, so right now, we got to try and get to the 21 EMA. That's at 25 cents. Next major zone is at 0.2547, just slightly above that. Then if we can climb even higher, pushing into around 26 cents, 0.2656, that'll break that level of resistance up higher to 27 cents, 0.2759. That'll finally break out of this major zone and start to show some stronger formation, possible consolidation back in that previous consolidated zone. Also putting us back into slight green for that Fibonacci retracement. But right now we're still holding inside the red zone. So not good. Further drop down, the lowest level right here, we're seeing not too much strength of relationships between these. It is showing a little bit of an uptrend like this, as you guys can see, for the higher lows. So that is one thing to take into account. But I would be looking at a bottom zone of concern around 21 cents, 0.2094. All right, let's go ahead and move on to the graph. Whoops, I did not mean to do that. Taking a look at the graph. Graph is still dropping, guys. Pump and dump, pump and dump and dump and dump. Well, pump and a dump, a dump, a dump. Geez, and if this decides it wants to drop further down, right now we're seeing a base bottom zone of support, critical level support at 32 cents, 0.3208. This is based off of the Coinbase chart from TradingView, but when it did launch on TradingView, although it does not show it here, it actually launched at, I believe it was right around 10 cents. So there is potential that we could see a drop down to those kinds of levels. Doesn't necessarily mean that that's going to happen, but the technical charts, which you guys can't see right here, is suggesting a strong sell. We are seeing red on the daily candle formation. A lot of FOMO came in with this because it was pushing up towards the dollar region zone, and now that a lot of the action has been dying down, people are starting to say, hey, just take your profits, go ahead and move on to another project, look for something else that's going to be trying to move soon. So it had a really nice launch, but these major pullbacks is causing a lot of concern for people, and because of that, we could actually see a further decline down. If you are looking for some positive momentum back up, the next major zone of resistance is going to be right around 49 cents, almost 50 cents. We're seeing some relationship here from December 19th on December 26th, as well as with December 27th. All right, let's go ahead and look at REN now, REN USD. And as you guys can see, there was some really nice action climbing up for REN, but it did retrace back down about 50%. These pump and dump situations are coming up a lot. And when you got lower price cryptocurrency, same kind of mentality actually also takes place with a lot of stock as well. So pump and dumps are obviously a lot easier to occur with smaller priced variables. So it's a lot more risky on those kinds of positions, right? You could totally get wrecked. You spend a whole bunch of money on a project like this around, let's say, 75 cents, or in this case, you go up to 41 cents, right? So you think it's going to go to 50 cents. You think it's going to go to $1. You come in around 40 cents and boom, then they dump on you. And when they dump on you, they drop you all the way down to 33 cents. It's only a couple cents difference, but you multiply a couple cents by 1,000, 10,000, 100,000 ownership tokens that you have of this. Well, now you've lost a lot of money, and you got to make the decision. Do you take your losses, or do you keep holding on? Do you dollar cost average and you buy more in at this position? You might end up buying more in this position, and they were waiting for you to do that, so then they dump even harder because they buy in at another position. They buy in at the dip right down there, right? You just made it rally some more, and they take it, hit you even harder, and you finally get weak hands, you sell off, huge loss, and then they scoop up everything at an even lower price point. just wash, rinse, repeat for these kinds of things. But the golden rule: never invest more than what you're willing to lose. And also, I just forgot my other point. Anyways, let's go ahead. Let's go ahead and take a look at this, guys. So a bottom zone for this is going to be looking right around here, 25 cents. As you guys can see, the base of the candle formations as well as the bottoms of the wicks on these positions show a pretty strong consolidated form. That's looking like right around the lowest price point I would be concerned with right now. So around 25 cents for the lowest price point. A little bit higher position, we actually see the 21 EMA. Even before that, actually, we go to 31 cents. So I would say 31 cents, 0.3138 is major zone. Then we go down to 29 cents, 0.2953. And then even further down below that is right around 25 cents, 0.2499. Okay, I'm going to go ahead and wrap up this video, guys. Need to get above 41 cents to hit another higher position off of this. If you guys are new to the channel, don't forget to hit subscribe, hit that thumbs up like button. Let's try to get to 100 likes on this video if possible. And also click that bell icon so you know whenever we have the latest video come out. Leave a comment down below. Tell us what you thought about everything today. If you have anything you'd like to add that I didn't mention. And if you even just want to say hi. Thank you guys so much, and I will see you in the next episode.